Hello, and thank you for joining us today as we continue our complimentary account validation webinar series. My name is Luis Guzman. I am a Senior Director of Business and Product Development here at NACHA, and I will serve as the moderator for today's presentation. The goal of this series is to provide you with an overview of the incoming web debit rule and to also showcase solutions that can not only help you comply, but provide your customers a great payment experience using ACH. Today, I'm happy to present with MicroBilt, a NACHA preferred partner. But before we begin, I wanted to talk about the webinar to go tool. There will be a Q&A session at the end of this presentation. I would encourage you to submit your questions using the widget for webinar to go on the right screen, which is typically the default. We will answer as many questions as we can during the allotted time. If there are any questions we do not get a chance to answer, we'll make sure to source those answers and send them out in an email. Also, I would like to recommend that you visit our website at nacha.org. There are a number of resources available for you to learn more about the web debit rule and other NACHA initiatives. There's an email list that you can sign up for that sends you an update whenever a new rule or change is coming. There's also requests for comments or requests for information that are also sent out that give you the opportunity to weigh in on the decision and the direction of the network. Also, if you wish to get more involved, I would recommend becoming a member of our Payments Innovation Alliance. There are multiple conferences throughout the year, which currently are being executed virtually during this time. In addition, there are a number of work groups that you can participate in that focus on industry betterment. I would like to introduce our speakers today. First is Dave King. Dave King is the Senior Vice President of Strategic Development at MicroBilt. Dave has a Bachelor's of Science degree in accounting. He is the former National Treasury Manager for Nordstrom, Vice President at Wells Fargo Bank. Dave helped manage part of the eCheck and ACH risk management team at Intuit. Dave has been the SVP of Strategic Development at MicroBilt for the past 9 years, where he and Jane Keller created the Risk Verified database service as a leading product that we'll be discussing today. I would also like to introduce Amy Morris. Amy is a Senior Director of ACH Network Rules at NACHA, where she leads and participates in multiple working groups that addresses issues in the payments industry. In addition to collaborating with industry participants on changes to the operating rules, Amy also assists in educational activities and provides rule and operational guidance to network participants. And now let me share my screen. Since I forgot to do that, my apologies. Again, these are our speakers, Dave and Amy. Amy, I turn it over to you. Thank you.
Awesome. Thank you so much, Luis. And again, welcome everybody. For those that aren't familiar, just wanted to give a quick introduction to NACHA. So we do write the rules for the ACH network, but we do a lot more. We're actually a rule writing body for other payment types, such as the Quest network. We do a lot of association work around promoting electronic payments and providing education around electronic payments. We also have organizations in interoperability standards and dealing with APIs. So we are a lot of things having to do with payments. So just wanted to, introduce NACHA if you aren't as familiar. But why we are here today is our role as the ACH network administrator. We write and enforce the rules for the network, and we provide education on those rule changes. So we're here today to really kind of set the stage, discuss for about 10-15 minutes exactly what this upcoming rule change is, and then I'll turn it over to Dave to talk about solutions for compliance. So on the next slide, we see that what we're talking about here is really where we began from when we implemented rules for what we call web debits. That's the standard entry class code, WEB. And the rules around a web debit were first implemented well over 20 years ago. And they define everything that one needs to do when initiating a debit transaction to a consumer account that in some way, shape, fashion, or form communication related to that payment has taken place over an unsecured network. Could be the internet, could be a mobile device. We have had these requirements in place to tell what we call originators. An originator could be a merchant, a biller, a financial institution. It is basically the sender or the creator of the transaction, what they have to do in order to be compliant in these transaction types. So ever since we wrote the rules, we have required a commercially reasonable fraudulent transaction detection system to screen those debits. In our guidelines, which is the back part of that big book that we put out, it is always stated that an important element of that commercially reasonable fraudulent transaction detection system is the use of some kind of mechanism that is designed to validate the account. However, apparently being in the guidelines, it was going unnoticed. And so the purpose of this really is, of course, to protect the quality of the transactions in the network, to protect those parties downstream from receiving bad transactions that they didn't have any control over receiving, and also to help the creators, the originators, the senders of those payments also not have to deal with a bunch of exception processing or relationship types of issues. As the originator in the ACH network is the one who is dealing with and getting all information from the account holder, they are in the best position to be able to detect and prevent that fraud. So looking at the next slide, you can see, in fact, what this rule change did, which is to take that language out of the guidelines and move it actually into the rule language itself to explicitly state that commercially reasonable fraudulent transaction detection system must also contain an account validation. So what this means is that when you are, as an originator, creating a web debit, so remember, a web debit is a debit to a consumer account, and again, with some kind of initiation happening over an unsecured network. And also, it is the first time that your organization, your service provider, et cetera, has seen that account number. Then this rule will come into play. Now, the rule does only apply to consumer debits. However, that is not to say that it is, NACHA would always say that it is a best practice to use account validation for any types of payments, credits, B2B, et cetera. However, this particular rule, the requirement is on, again, these web debits, which are consumer. So as of March 19th of next year, that's when the rule goes into effect. Going forward, anytime that originator is creating a web debit and it is the first time they have seen that account number, then it must be validated. If that account number has been seen successfully before, even if it was in a different channel, it was a telephone call, it was a face-to-face authorization, what have you, again, that experience has already been had, and so it does not require validation. So a little bit more information on the next slide about the commercially reasonable. We have been specifically neutral with regard to the methodology that one must use to comply with the rule. In our training, we've listed some options, being an ACH pre-note, The ACH pre-note or pre-notification entry is a $0 entry that flows through the network. And then when it gets to the receiving financial institution, if something is wrong with it, that receiving financial institution is supposed to send a message back, either in the form of a return or complete rejection of the transaction or corrected information. So it's a very good process in that it is ubiquitous. You can reach every account. It doesn't take any action from the customer or the receiver, but it is a process that is going to require some time. We also have ACH microtransactions. ACH microtransactions also have the benefit of flowing through the network and can reach anybody, but they are for very small dollar amounts, and typically there's a service wrapped around them in which the account holder or the receiver is going to validate some information about those transactions, proving that they've seen them post and they have access. Again, that ubiquity is there, but there is a requirement for the customer to take some kind of action, and of course there is, some time that has to lapse for that to happen. Then we kind of look at sort of what we're here to talk about today, which are some of the third-party commercially available services that are out there that in most cases are going to give you instantaneous results, and there's different kinds of ways that those services can do that. And we're also very hopeful that this would really expand the marketplace, and that we would start to see some more innovation in this space, primarily by a lot more partners being aware, or parties becoming partners by their understanding and knowledge now of the importance of account validation. And so we're, hopeful that we will see some, things enabled by APIs potentially. When we talk about meeting the rule, what is required by any of these services to meet the baseline is to validate the account number, which is the account number is good and it can accept ACH transactions. The rule does not require verification of the name on the account or ownership of the account. The caveat that I give in my training on this is that the commercially reasonable standard is always there. And so it's very important that you work with folks that understand your business and can help you get intelligence or just a good understanding of what's going on around you. If there are, for example, 95 of a particular type of merchant, and 94 of them are performing account verification on the name or the ownership, it's no longer commercially reasonable for the 95th one to not perform it, to do account validation only. So the commercially reasonable is in there, and you got to kind of pay attention. But the baseline for this rule is to validate the account number only. So when we look at the next slide, I think we've kind of talked about some of the benefits that we anticipate that we're going to get from making this language clearer and more explicit in the requirements to again protect the transactions, the downstream parties, and as well as the originators, all of having to deal with exception work, and of course the impact to the account holders themselves and the reputational harm that can cause for all parties involved as well. Another benefit, though, should be that originators that are starting now to take advantage of these account validation systems, either basic or with additional services on top, are going to have greater data for their internal fraud mitigations. Even separate from payments, you'll be learning more information about your customers that will help your fraud detection capabilities overall. And as I mentioned, we're really hoping, and as we are seeing, that there's a lot more awareness around this type of function in the network, and really seeing innovation grow around it, because we know that the innovation is there for the fraudsters, right? And social media has completely changed the game, where, everybody used to have to forward emails to tell about schemes. It's a lot faster to reach more people these days through social media, and we need to be able to limit that impact. On to the next slide, we understand that there are going to be some impacts with this. Namely, if if your system is not commercially reasonable or you're not doing account validation today, there is going to be an implementation required for those originators. That is also going to have a cost, and there could also be a slightly higher cost for the first time that you're originating that transaction. Now, once you've seen that account number, again, I said it's the first time, and so this could, keep in mind, this could be a new customer, or could be an ongoing customer that's just changed their account number. Now you need to validate that. But once you've done it the first time, you don't have to keep doing it. And so any increased cost in that original transaction should be offset by the savings that's going to exist in having fewer exceptions and dealing in having to collect payments or customer service issues, etc. For the receiving financial institutions, that's what RDFIs means. Those receiving financial institutions are probably going to see a swap out in the types of transactions that they have been receiving. So on the next slide, bringing all of this home and really talking about why we are doing this, I included a case study. And this is one. And this, if you see the middle bullet there, it says that this included approximately 900 transactions. In 1 year, we had about 4 very similar schemes. And this one was 900 transactions. We had it happen to another financial institution for a few hundred more, had some that were in the thousands, but it was all primarily the same scheme. And again, not really anything we haven't seen before, just grew so much more quickly because of social media. Financial institution began receiving a large number of debit transactions that had their routing number on it, but the account number field was not anything that matched their system. It was not even in a format that was appropriate. And they were at first unsure why they're receiving all of these debits that aren't for customers to their institution. There was no commonality as to where they were coming from necessarily. And a lot of times these were very small financial institutions. They have sophisticated systems in place, and they had to pay a bunch of overtime to have people manually return these transactions, created an issue in their financial position because they received the number of debits in one day that they typically received in a month or a year. So it was a mess on the financial institution side, but it was an even bigger mess on the side of those originators, those senders of the payments, and the ODFIs. The ODFIs are the originating depository financial institution. That's the bank or the financial institution of the sender of the transaction. They started getting these returns back, unsure why, and there was a lot of conversation and research and things that had to be done. NACHA had to get involved, et cetera, to explain and figure out, hey, we have found these videos online where people are giving out instructions of how to defraud. And so the originators, the senders of those payments, were left in a very uncomfortable position. Not only did they have a bunch of returned payments that they had to go collect on, but they had to have conversations with their customers. And some of them was, okay, this isn't good because somebody knowingly, intentionally defrauded me, and that's not a great feeling. But then there's also the other side where these are good customers, and now I have to try to explain to them that they're doing something wrong when they a lot of times don't even know that they're doing something wrong, and why they still owe a payment. And it creates, very, costly conversation in terms of the amount of time and just, having to deal with those types of situations. And the only reason that this was occurring was because those originators, and again, it was a vast majority of them, no commonality amongst them, they were not doing any kind of account validation. And so that's how this happened. By doing account validation, you are able to weed out those things that we know right off the top are just junk. That is not an account number at this financial institution. And that's what we're really avoiding with this. So on the next slide, I'm going to just mention a few of our resources that are available. Luis said at the very beginning, please go and check out our website. I want to make one clarification here because it has been fantastic for folks to go out there and check stuff out. But please make note that we actually have two different rule changes. Okay, we have a web page for each of our rule changes that provides all of this great information, including FAQs. We have two different rule changes that start with the word supplementing. This one is supplementing fraud detection for web debits. We have another one that we are not talking about today that is supplementing data security requirements. So if you go out to our website, please make sure that you're clicking on the right one and don't be confused with the FAQs for the other one, okay? But this one that we're talking about today, supplementing fraud detection for web debit FAQs, we actually have updated some of those that are out there, the last three at the bottom, with some very common questions and a lot of interpretation from different folks about selecting commercially reasonable and what commercially reasonable systems mean in terms of enforcement. So encourage you to check that out. Again, those three are the most updated, but there are many FAQs out there that could be helpful for you. And then finally, on the next slide, I want to point out that we are increasing the amount of information that we are trying to make available to end users of the network. So we actually have, down at the bottom is a new corporate end user resource page where all of the information is very rules focused, but hopefully not in NACHA language, and provides a lot of great information, as Luis was mentioning, about the rulemaking process and the role that end users play in that. But a really cool thing that we have started doing, and we have one, as you see, there's a snapshot at the top of it on this slide, for this rule change. These are one-pagers that are intended that if you need within your organization or one of your partners to quickly give something to somebody that will explain, this is why this applies to us and this is why we need to do this, this document should hopefully help you do that. And so please be aware that it is out there. Remember, again, we also have another supplementing rule change, so make sure you're clicking on the right one. But please do go out there and see those resources, take advantage of them, and if you have any comments or any input, let us know. And so really with that, I have set the stage in talking about what the rule is, what we have to comply with, and why we are doing this. And I will go ahead and turn it over to Dave to talk about how MicroBilt can help you with that.
Thank you, Amy. And thank you, Luis, for the introduction, and thank you to all of our friends at NACHA for putting this on. Let me take a minute and introduce MicroBilt to those that don't know us. MicroBilt is a consumer reporting agency, a CRA. That means our data and our products meet the highest standards of accuracy, quality, and security as mandated by federal regulations. We are overseen by the FCRA and the Gramm-Leach-Bliley Act, GLBA. The Fair Credit Reporting Act, FCRA, again, is enforced by the U.S. Federal Trade Commission, the Consumer Financial Protection Bureau, and private litigants. It is part of the foundation of consumer rights laws in the United States. The FCRA was enacted to promote the accuracy, fairness, and privacy of consumer information contained in the files of consumer reporting agencies. You'll see that MicroBilt is PCI DSS 3.0 compliant. We're also EI3PA certified and SOC 1 Type 2 compliant. Luis, let's go to the next page. So for over 40 years in April actually, last April, MicroBilt has been helping businesses assess and manage risk. MicroBilt has invested heavily in acquiring best-in-class data. We've built sophisticated systems for keeping our data fresh and accurate. We use powerful predictive models for making decisions around KYC and PII risk management. KYC, of course, is Know Your Customer. PII is Personally Identifiable Information. We are a pioneer in the ever-exploding consumer and bank account data space, and as such, have refined our products and services to deliver true business value. Luis? The focus is to combat fraud for web. What I'm going to do here is go through some of the highlights that Amy talked about. She did a very thorough job and got into some great details and some great background. Here's just some of the highlights of what her presentation was. The focus is to combat fraud for web ACH transactions over the internet from desktops, laptops, tablets, smartphones, and whatever they're going to invent next. Urgency dictated a fast start date of January 1st of 2020. However, there were several industries that requested a revised date to better prepare, most specifically the financial institutions, large corporations, utilities, billers, and the third-party payment processors. We at MicroBilt spent that additional time building stronger systems and a more complete educational process to the multiple verticals that process web debits. And as Amy said, the new date to comply with the web debit rule is March 19th, 2021. And believe me, that's going to get here quickly. I'm sure like most of you, you can't believe that September is halfway gone already. ACH originators of web debit entries are required to use, quote, a commercially reasonable fraudulent transaction detection system to screen web debits for fraud. The existing screening requirement will be supplemented to make it explicit that account validation is part of the solution. This supplemental requirement applies to the first use of an account number or changes to a consumer's existing account number. Luis? The methods to evaluate an account may include, but are not limited to, the use of a pre-note verification, a pre-notification entry, which unfortunately does not give any additional consumer or bank account information. It is also not a real-time event. The ACH microtransaction process that involves taking a small deposit, making a small deposit into the consumer's bank account to verify the account, it usually takes 1 to 2 business days, requires consumer action, and it too does not return any additional consumer or bank account information. Luis? The methods to evaluate an account may include, but are not limited to, the use of a commercially available bank account verification system, which is what we will present here today with our Risk Verify database, or as we call it, RVD Advantage. Some of these services are called account aggregators, which is a process where consumers opt in and provide their banking credentials to access the account to validate it. This is not a real-time event and ineffective for high volumes. The account validation in the ACH landscape is defined as a third party that verifies funds that are coming from or going to a legitimate bank account. Essentially, account validation authenticates an account before approving any transaction for processing, all of which can be provided by an ODFI or third party, such as MicroBilt. An account with a proven history of prior successful payments is, as Amy mentioned, a sufficient means of validation for use of the account as a new web authorization. The new rule is based on a going forward basis and applies to all new account numbers obtained for initiating ACH web debits. The rule applies retroactively to account numbers that have already been used for web debits. And as many times as I've seen this is the first time I saw the word "not" in there. We'll remove that. The rule applies only to consumer bank accounts, not business accounts. Okay, Luis. The rule is intended to help prevent the introduction of fraudulent payments into the ACH network and to help RDFIs from posting fraudulent or otherwise incorrect or unauthorized payments. Originators are in the best position to detect and prevent fraud related to payments that they are initiating, especially considering some recent risk events perpetrated via social media channels. According to the factors described in the rule, a commercially reasonable account validation process may include instances where a web debit entry is initiated even if the attempted account validation resulted in a no hit. Luis? So let me get into the meat of the Risk Verify database, RVD Advantage. 8 years ago, MicroBilt recognized the growing need to develop a database that's tailored to the use of bank accounts today and the unique difficulties that can occur. It's a shared database with all users contributing as they are allowed. RVD has grown to over 1.8 billion ACH and e-check records in our in-house database. It is dynamically updated in real time, all day, every day. We collect and return up to 2 names and telephone numbers associated with the account if resident in RVD. You will receive the return reason code on returned items. This allows us to distinguish between fatal returns, account closed, account not found, etc., and non-fatal returns, such as NSF or uncollectible funds. On every transaction, RVD returns all historical information known on the account, including the total number of times we've seen the account number in the database and the total associated dollar amounts. Luis? Our real-time responses are most effective because as a consumer reporting agency, a CRA, we can include specific personal PII and bank account data. We identify specific return reason codes in our database, such as R2, account closed, R03, account not found, R04, invalid account number, R07, on an authorization revoked, R10 is not authorized, and an R51 item ineligible. We report known return transactions and whether they are paid or unpaid. If paid, we report the number of days it took for them to be paid, 4 days or longer, such as 55 days, each carrying a different risk message representing a redeposit that cleared or an account going through hard collections. We also report the first and last dates seen in the database, as well as the number of times that a bank account has been seen. Luis, let's go to the next slide. You can access the MicroBilt RVD service via our REST API through our developers portal at microbilt.com. RVD can be tested in the sandbox and in production in less than a week or 2, depending on your resource allocation. An API round trip ping for RVD is real time, under 1.5 seconds. You can take advantage of the versatility of unlimited rule sets to manage and mitigate risk according to your specific risk parameters and the multiple verticals you process for. We offer enhanced returns management capabilities, velocity limits of dollar amounts, and the number of transactions per day, week, or whatever parameters you want to put in there. Up to 2 first and last names are returned, and up to 2 telephone numbers are returned if they're in the database. RVD also has an OFAC AML, anti-money laundering check, as an added option, and decisioning is simple: accept, decline, or warning. Decline disputes are handled in strict adherence to FCRA guidelines. Okay, Luis. MicroBilt has the flexibility to weave in special requests with a dedicated internal development team. We have found that one size does not fit all. We incorporate requested changes and changing consumer banking habits into the database, such as the movement from paper to ACH and from traditional banking to e-banking and e-wallets. MicroBilt's account verification service has earned us the status of NACHA's preferred partner in this space for the 2nd year running. The Third Party Payment Processors Association, or TPPPA, has named MicroBilt as their preferred vendor for account verification services. And again, MicroBilt handles all consumer disputes for you through our FCRA support desk, and no one else does this. And we do not charge a fee for this. Typical, Luis, before we go, a typical example would be if we send a decline response, and the reason on the decline response says account closed, we also include an 800 number that goes directly to our FCRA support desk, where the consumer can speak with a specialist who will help them resolve the situation within FCRA guidelines and within FCRA timelines. So, okay, Luis. Here's a summary slide of the of RVD Advantage. RVD is a user shared database as best as allowed. It is built and owned by MicroBilt. We look at current and historical bank account data, bank routing number information, and fraudulent patterns. As a shared platform, users contribute select processing history and their daily return transactions with return reason codes. The RVD database has over 1.8 billion ACH and e-check records and is dynamic, updated in real time, all day, every day. Users of RVD include the following: banks and credit unions, lenders, ACH processors, billers, insurance companies, utilities, retailers, government sources, and many others. MicroBilt handles all consumer queries within FCRA guidelines. Okay, Luis, we can go to the next one. MicroBilt's bank account pre-screening products make it easy to verify someone's banking information before you process transactions. Our predictive analytics and algorithms mean that you can do business with confidence, that you know who you're dealing with and can assess their ability to pay. RVD Basic uses algorithms and looks at historical data on bank accounts to predict if an e-check or an ACH debit will process without returning. RVD Advantage then combines that information with the ability to validate that the ABA number is correct and the account number complies with that specific ABA number and for the transaction. The RVD Advantage starts at a dime and goes lower with volume. RVD Plus Code Model offers the option to combine the historical power of MicroBilt's RVD database with RVD Basic and RVD Advantage, along with multiple banking, retail, and billing sources to predict the current status of the bank account. All three versions offer the OFAC AML check as well. Luis? And here's a list of all the responses that accompany the accept or decline response for RVD Advantage. The ABA number verified as legitimate. The account number's structure complies with the specific ABA number. Decision response to accept, decline, or warning based on your specific risk parameters. Identifies new account holders as in never seen before in the database. Up to 2 first and last names we have associated with the MICR. The ability to match the name provided and the name associated within the MICR of our database. Up to 2 phone numbers we have associated with the MICR. The number and dollar amount of all paid and unpaid returned items with average number of days to repay, inclusion of OFAC AML activity as an option. The number and dollar amount of all transactions seen for that bank account. The number and dollar amount of outstanding return items reported into RVD. The number and dollar amount of both paid and unpaid returned items. The date the account was first seen in the database. And high risk or low risk based on the parameter rules set within MicroBilt. These rules can be set at various levels, including vertical specific or even for individual merchants. And Luis? That concludes our presentation. Jane Keller and I came to MicroBilt about 9 years ago, and we were tasked with building and managing and growing the Risk Verify database. Our phone numbers are right there, our email addresses are there. Contact us with questions, and if you'd like a copy of this presentation, I'd be happy to send it to you. Just send me an email. Luis, I'm going to turn it back over to you, see if there's any questions we can help with. Thank you.
Thanks, Dave and Amy, for the information and the discussion. A few questions to begin with here. And Dave, I'll start with you. Let's start with, and there's a few of them that I'm putting together, but can you provide any additional insight on how the service handles corporate accounts?
Yeah, while the rule does not require you to verify corporate accounts for the web debit rule, it works, the system, the MicroBilt system works the exact same, whether it's a corporate account, whether it's a small business account, or whether it's a consumer account.
Thanks, Dave. Another one for you. Are there extra implementation requirements since you are a credit reporting agency?
No, there's not. When we do our compliance verification of new customers that want to use our services, we have a credit compiling application. If you're not a public company, we ask for a copy of your business license and who the principals are, and request a letter of intent. It's actually a pretty easy process, but we do get to know our customers from an overview and underwriting perspective.
Thanks, Dave. Another question is there a contribution required for all clients regardless of industry?
You know, that's a good question. When we started the database, it was a hard requirement, and we were actually asking and getting 3 years of all ACH transaction history, and on a daily basis going forward, we were receiving new returned items with the consumer name and the standard entry class code for the return, and we were also getting the paid file, and that's how we know how many people have returned checks, what their average days to pay is. As time went by and the database grew, we've relaxed that requirement, especially for financial institutions, government entities, and other companies that have contracts prohibiting them from contributing or sharing their customer data. So it's not as hard as it was. It's better for you as a company to provide some sort of history if you can, especially at least a minimum a 6-month history of returned and paid data, because that helps us ferret out the bad actors before you even begin processing with us. So we're very flexible. We understand the needs of different types of client. If you're a high risk processor, we're really going to push hard for all the data we can get from you, because you've got a lot of bad actors you're working with. I hope that one helps, Luis.
Thank you, Dave. I have a few for Amy here. Amy, how are companies or the originators being notified of this new rule and what it entails?
So that's a great question. So as I mentioned in the presentation, NACHA is trying to expand our reach to the end user community, so that folks do recognize us and do know that they can come to us to learn about these things. But typically, originators, merchants, billers, companies find out about the requirements through their financial institution, their ODFI. The way that the NACHA operating rules work is essentially contract law, and so it is the financial institutions who are bound to abide by the rules, and that is where the enforcement starts, is NACHA goes to the financial institution. And so the financial institution warrants that all transactions that it sends meet all of the rules, and they indemnify the other parties based on that warranty. And so the financial institution provides all of that information back to their originators, because their contract says that I, financial institution, am going to send your transaction. I'm going to allow you to be an ACH originator, but we are going to contractually bind you to abiding by all the rules that we're warranting. And so financial institutions go about that in many different ways. Some are better than others. Some may have kind of an expectation that you figure this out on your own. Others will send emails. Others might go through your actual treasury rep at the financial institution. There's a lot of different ways that can happen. But if you do not want to simply rely on your financial institution, which I think is a great thing to take that responsibility, you can always come to the NACHA website. And as Luis said, the rules news is a great new tool because it is strictly just that, rules news. It's not about a bunch of other stuff that NACHA is doing. It is what you need to know about potential rules and past ballots that have already been passed. And so that is a way. There's also payments associations, used to be called regional payments associations, but now they're just the payments associations that do a lot of education and have end user. A lot of the states are members of payments associations. They get their payment education through that. But there's a lot of different tools, but either through your financial institution is the traditional method in the past, but you can also definitely sign up with NACHA or a payments association and get additional education.
Thanks, Amy. And a follow-up to that, the website aside, is there a way to engage with NACHA with additional questions regarding its rules and guidelines? Or is there like email groups? Is that on the website? How can someone reach a NACHA expert when they have questions for rules?
Awesome. So if you want to reach a NACHA expert, you can definitely go through our website. We do have a link out on our website to ask your rules question, and it comes into the staff. So that is through the website. But there are a lot of other things that are available. As was mentioned in the very, very beginning, there's our Payments Innovation Alliance, which you can become a member of. And also once you start visiting the NACHA website and you start looking at the different groups, a lot of those groups have online forums where a lot of really, really smart people that have been around in the payments industry for a very long time, they are members of these groups, and these folks ask questions amongst themselves and get fantastic answers, and all of that is in these forums through our website. And so between reaching out to us at the NACHA Rules team directly or getting involved, we are also, one final thing I will mention that you will see is we're going to start offering webinars for end users only. So no financial institutions, no, none of the big guys, but for the end users only. Then we're going to be providing these webinars. It will be a longer, in-depth look at certain rule changes, and there'll be plenty of opportunity to learn more and ask more questions on those as well. So look through the rest of 2020 and beyond that we'll be offering those.
Thanks, Amy. Dave, a few more have come in for you, so I'll throw some questions your way here. One is, in regards to the accuracy of the database, are you able to kind of share how you keep it up to date and keep the accuracy at a high level?
Yes. Let me go over to my own screen for a second here. I'll tell you exactly how we manage that piece of data. All of our data is encrypted using AES 256 XTS cipher, in addition to being compliant with PCI and the others that we listed at the beginning.
Thanks, Dave. Another question for you. It's more of a clarification. The question is a no-hit a valid response that satisfies the NACHA web validation rule? It might be part of Amy in there as well.
Yeah, actually, a no-hit is considered a valid attempt, and the word attempt is key there. I actually confirmed this with NACHA personnel a couple of weeks ago, that a no-hit is a valid attempt, and thus you may move forward with the transaction.
Yeah, and this is Amy. I'll chime in on that. So the 3 updated FAQs that I mentioned actually cover that. And it is, I would suggest that you kind of look at all 3 of them together. We're actually in the middle of putting an updated note out there suggesting to look at all 3 of them because it answers that question. And it also lists that if you do have a no-hit, these are some things of your own internal data that you may choose to look at to make a decision on a go-forward basis. But it clarifies, you know, what is considered within the realm of the rules when that situation happens.
Thanks, Amy, and thank you, Dave, for that. Question that has come in here for Amy. It's a long question, so bear with me here. All real-time validation services have a false decline problem where the database is inaccurate in a certain percentage of the time. What is the solution to this problem? This has the potential to create a larger problem than the validation rule is trying to solve.
So, you know, I'm going to probably defer a little bit of that over to Dave, because I mean, that is a bit of a market issue of, you know, that's something that the providers need to solve for. If the product is causing a bad customer experience, then that's not a good product. You need to that's an important key of making your decision, is how much information am I going to be reaching? What kind of information does this system hold in terms of what my customer base is? What's the likelihood, you know, that I'm really going to run into a no-hit or a false negative situation? And again, there is a difference between a negative and a no information type of response. I would say that if your system is giving you, in fact, false negatives, where there is reporting a problem with an account that isn't, then that's definitely a product issue. If you're concerned about the no-hit situations, then I think, again, that's really, you have to analyze what is going to work best for your situation. There was an example thrown out in one of the previous webinars to say that, well, if a system says that they carry 80% of the accounts in the United States, that doesn't necessarily mean that 20% of the time you're going to get a no-hit, because chances are that 20% of the accounts might be inactive. They might be in a different part of the country. They might not be part of your customer base to begin with. And so this is the type of analysis that you have to do when deciding to pick a product. But that's, in my opinion, that's a key factor to look at to avoid. And I think it can be avoided.
Thanks, Amy. Dave, anything to add to that?
Yeah, I'd sure like to make a comment or two on that. False positives and false negatives are a way of everyday life, no matter what you're doing. I can tell you that over the years and the very, very high volumes of transactions we've processed, Jane and I have not received any complaints from any of our customers about this issue. One of the reasons I think that RVD is different from others is because as a CRA, of course, we're able to report back as much personal information and bank information as we can. We report that back for a reason, so that the financial institution or processor or the company that's getting all this information can run it against their own database of known users and verify perhaps another point. If our information doesn't match anything, then you've got a whistle, a red flag to pay attention to. We think that sending this additional information back has really been helpful as far as the false positives and negatives go.
Thanks, Dave. One final question before final comments and conclusion of our webinar. Dave, can you talk a little bit about what type of information is required to access the RVD service via the portal?
Yeah, through through the REST API. The minimum requirements for a transaction are the routing number, the account number, and a dollar amount. That will work. We like to get a name so that we can match that for you. But it's not a hard requirement. Just those three fields are the hard requirements. We keep it pretty simple.
Thanks, Dave. So as we come to a close, I'd like to ask if you have any final words, Dave, and Amy. Dave, I'll start with you.
Yeah, sure. I'll just summarize it with thank you for letting us be part of the education team here. As a participant, if you are a financial institution or a payment processor, as a CRA, we don't move money. And so we do not need to know who your downline merchants are. That's not a requirement of ours. We, like I just said a minute ago, we really like to keep it simple. Thank you, Luis. Thank you, Amy.
Amy, any final thoughts?
Thanks. Again, just my appreciation to everybody, and just a reminder to please definitely check out our website, particularly the rules pages and that end user corporate resource page. It is significantly growing, and so you are going to find a lot more resources out there about rules and rulemaking process, and just really appreciate everybody's time.
Thank you, Dave. Thank you, Amy, and everyone. That is NACHA.org. Please do visit the site. If you have any questions as we conclude here, just send me an email and I'll make sure to get the answer for you. Thank you to our speakers, Dave and Amy. This concludes our presentation. Thank you.
Thanks, Luis. Thanks, Amy. Thank you, everybody.